Welcome back. Let's take a look at how the markets have performed now, particularly over the last couple of hours or so. Early on this morning, we saw some positive trade coming out of Asia then as well, and that filtered through right till the end of the trading day. So that positivity coming through from the U.S. jobs numbers that came through yesterday. 4.8 million jobs added to the U.S. economy, 1.8 million more than people or economists had actually expected, meaning that the unemployment rate in the United States went to 14%, but has now fallen to 11.1%. So better figures there out on that front. It means that the U.S. economy is well on its way to that recovery. Of course, today is that headed towards that July 4th holiday as well then. So markets not trading later on in the United States. So all of the joy sort of coming back and coming into this market picture just before we head into that weekend trade. But unfortunately, that Asian trading picture didn't filter through into the European market, nor did it filter into the local market. If we kick off out in Europe, things are pretty much in negative territory there, around 1% lost for the FTSE 100 out in London. The DAX as well in Germany, 1/3% weaker. The CAC 40 also down nearly 2/3% there. Just a touch weaker is the JSE All Share. It's still above 54,500 points though, sitting in negative territory there. The biggest losers, the resources index going down just over 1% on that front. The biggest losers within the sector, that is the gold counters as they went down 0.75%. Industrials, though, managing to head higher. Of course, it does mean that the likes of Tencent out in Hong Kong and in Asia particularly did go up earlier today. So that boosting the industrial counter there on that front, 0.5% to the good. On the commodities board, earlier on we had seen the oil price go a little bit higher, but now fears around just how much demand there might be in the market has certainly piqued its interest, and now going down 1 2/3% is the Brent crude price, sitting at $42.61 a barrel. A slight sense of positivity when it comes to the other commodities there. Platinum sitting at $806 a fine ounce, $1,776 a fine ounce for gold there too. Onto the currency board. Well, we had set at a much better figure when it comes to the South African rand, 16 rand 89 even at some point, but unfortunately we've lost a little bit of that. The positivity then means that the market did not look into the negativity on the local front and rather focused on the positive, which was that the global economy seemed to be opening back up, which means that there is some sense of positivity and more trade. It was one of the better performing emerging market currencies as well, was the local currency, with the US dollar weakening ever so slightly. But unfortunately, that's come back ever so slightly. We're just above 17 rand now against the US dollar. It's 19 rand and 11 cents against the US dollar, 21.19 then for a British pound. Warwick Lucas from Galileo Capital. That rand dipped below 17 rand. We had hoped it would stay there and continue to perhaps get a whole lot better, but it's not to be, unfortunately. Will we get it to perhaps stay at those levels?
Right, Arabili, I think there's a few factors coming into play here. I mean, one of them is that for the first time in a very, very long time, indeed, 17 years, South Africa showed a current account surplus, which is basically not always a sign of economic robustness. I think it basically highlights the fact that during our shutdown, I mean, obviously retailers and various importers heavily pulled back orders for imported product, so it's not necessarily a sign of economic robustness, but nevertheless, I mean, since currencies sometimes measure your trade balancing act, they're a fact of life. The other factor is, of course, that this is globally a hot money environment, which is nirvana for emerging market currencies. I mean, real yields in emerging market bonds are basically at levels that tend to lead to firming currencies, and you know, looking at the sheer size of the recovery we've had since the currency, I should say, sovereign downgrade. I mean, this basically shows us that external drivers are basically maintaining the upper hand for now. So it's a bit of a basket that goes up to keeping this rand as strong as it is.
Yeah, I suppose it becomes very difficult to measure exactly where it'll go from here, considering that we don't actually know when the end of the coronavirus pandemic actually will be as well. I suppose the market trying to look ahead of all of that. One element that can help in looking ahead is the jobs numbers out of the United States. 4.8 million jobs added in the in that month rather. It gets really interesting then when you have 1.8 million more jobs than actually expected. Does that attest to just how volatile the market is right now?
It certainly attests to how volatile the economic news is. I mean, the anticipation was that jobless rates would fall to 12.4%. Instead, we saw it go down there to 11.1%. So that was good news. And the fact that you had temporary layoffs, I think was perhaps an even better indicator there. That fell by 4.8 million to 10.6 million. I mean, that is a heck of an improvement. So some positive signs coming through there. However, for the time being, new jobless claims are still stubbornly high. So there's clearly a bit of work to go there. But the U.S. economy clearly taking some encouragement there. And of course, because it's one of the most open in terms of layoffs and retrenchments and hiring, it tends to be one of the first that we tend to actually get news from.
Should we be perhaps factoring in the chance that we certainly are on our way to a recovery here, or are we perhaps jumping the gun?
I think there's a lot of news to flow under the bridge, and I think the key thing is how do we actually finally exit the whole issue surrounding COVID. I mean, the one option is that we get a vaccine. The second option is that we get a series of cures which collectively reduce the level of lethality of the virus to a point that it's tolerable, which leads us to the third possibility, which is simply societal acceptance of the dangers of it, or otherwise, i.e. that we basically say, well, it's now in a tolerable range. So those are our basic three exit scenarios, and at this stage it's very difficult to see which is going to prevail. Nevertheless, some of the excitement in US and other markets has related to Pfizer's latest attempt to produce a vaccine. I mean, there's still obviously a lot of news that's got to flow under the bridge before a vaccine actually goes to market. It's one thing to have a theoretical vaccine and quite another to have a working one.
Yeah, I suppose the difference here comes in the likes of Cipla saying that they're going to be able to put in a drug in South Africa. Remdesivir is a 5-course drug that may cost around 5,600 Rand, as well as some of the questions that are being put out there. Will that be able to help when it comes to the fight against COVID-19? Very generally then, let's talk about your outlook on the market picture for the coming week. Then perhaps your focus points and elements that you're looking out for, Warwick?
I think in the short term, the driver in the seats is still remains global liquidity. There's ample amounts of it, and I think not fighting the Fed seems to be the way of it. I mean, obviously, valuations are elevated, but I think it's not the first time that we've seen that you can't necessarily fight those sort of valuations. I mean, they may stick around for quite a while until this process works its way through.
Yeah. All right. Warwick, appreciate the time. Thank you so much for it. Have a wonderful weekend and stay safe, please then. Warwick Lucas from Galileo Capital joining us there as we help unpack that market picture. It is